listening to the ATM Marketplace podcast. In the ATM business, you need a dependable source of cash. Satisfy your cash requirements with U.S. Bank Cash Management Services, the largest vault cash provider in the nation. We currently manage over $3 billion in monthly vault cash for nearly 57,000 ATMs, and we're ready with resources and expertise to help you advance your business goals. Learn more at usbankcms.com.
Hello and welcome to this ATM Marketplace podcast, Effective Cash Management for ATMs. I'm Suzanne Clucky, your host for the podcast. As financial institutions continue to close branches at a steady pace, ATMs become an increasingly important touchpoint for cash-using consumers. And getting the delicate balance of cash management right becomes increasingly important as well. An understocked ATM can mean unnecessary CIT costs or annoyed consumers who will not return to that machine. On the other hand, a needlessly overstocked ATM risks greater losses in the event of theft and the opportunity loss of idle cash. In this podcast, we'll look at ways to maximize the profitability of your ATM fleet by fine-tuning cash management. My guest is Sam Ditzian, CEO of Tremont Capital Group, a leading provider of consulting, research, and merger and acquisitions advisory services to the cash payments and ATM industries. Sam is among the top ATM industry experts globally and has advised more than 100 ATM deployers, both bank and non-bank, including 4 of the nation's top 5 deployers. Sam, thank you for joining me today. I know that a lot of the questions that we have about keeping cash costs under control. So I'm going to dive right in here with some questions for you. And I'd like to talk first about some of the factors that influence the cost of cash.
Well, happy to be doing this. Let's start off by discussing really what the definition of cash costs are and where it fits into the hierarchy of the operating costs when someone is operating an ATM. So for the purposes of our conversation, I really want to focus on ATMs owned by banks or independent ATM deployers and not merchant-owned ATMs that are owned and loaded by merchants. When it comes to a IAD-owned ATM, there's really 3 categories of costs that an ATM could incur when related to cash. The first one is vault cash costs. So vault cash is the interest expenses and the fees incurred by borrowing cash from a bank or another third party. Now, some deployers, as you know, use their own cash for their own working capital. In that case, there's a true opportunity cost associated with that cash versus using it or investing it in other ways. You know, a lot of economists like to say there's really no such thing as a free lunch. So that opportunity cost needs to be accounted for when someone is doing an analysis on using their own cash to load into their own ATMs. Most deployers are borrowing vault cash from a third party. The huge operators, and I'll talk a little bit more about this in a bit, do have some more sophisticated options, such as using interest rate derivatives to either fix or cap vault cash rates. And I can explain a little bit more about that in a bit in terms of the sources and costs of vault cash. But that's the first category, which is kind of vault cash in terms of overall cash costs. The second category is how do you get that cash into an ATM once you have that cash available? And deployers either pay an armored courier or another third party to replenish vault cash, or they load it on their own. And we can talk a little bit more about that as well, because much like using your own free cash, it's important to kind of account for, in some respect, your time and risk when you're loading cash into the machine, because it does take time and there's an opportunity cost of that time, etc. Mm-hmm. Then there are a whole range of other costs and soft costs, such as cash insurance, reconciliation fees, various bank fees, claims processing with banks, processing and armored carrier fees and other costs. Some people outsource a lot of cash management and or cash forecasting.
Mm-hmm.
So all of those have cost or soft costs associated with them, and it's important to account for all of them if you're being honest with yourself about what is your true quote-unquote total cost of cash. And then in regards to kind of fitting into the hierarchy of operating costs when someone is operating an ATM, it really depends on a multitude of factors, but primarily it comes down to how much cash are you using, the source of that cash, what type of interest rate environment we're in, and then who's loading that cash into your ATMs.
Mm-hmm.
But to oversimplify, generally, approximately 10 to 20% of a typical ATM's operating expense goes to vault cash, and then another approximately 10 to 20% of your operating expenses goes towards cash replenishment and the other cash costs I just mentioned.
Mm-hmm.
And that's a lot. That's obviously a total of 20 to 40% of your total operating cost. It's hands down the most expensive item, other than commissions, which is always the most expensive.
Right. Okay. Yeah, that is a good chunk of the cost of operating an ATM if you're up to 40%, especially. So you had mentioned interest rate derivatives. How does that figure in?
Sure. So there's a couple of different sources of vault cash. Again, some people are using their own cash, and again, that does need to be accounted for. The more common approach is that any type of deployer is borrowing the vault cash, and that's generally pegged to prime rate, which just got reduced very recently to 5%.
Mm-hmm.
And who knows where it's going to be a month from now, a year from now, or 2 years from now.
Right.
There's all sorts of very educated economists who have predictions. We'll see how it all turns out. But vol cash, when it's pegged to prime rate, is always open to fluctuate depending on the market. Typical bailment agreement is generally prime rate plus some amount, right?
Mm-hmm.
It kind of, again, depends on who you are, how much cash you're borrowing, your negotiation abilities, etc. But ultimately, it's typically pegged to prime rate, plus or minus some amount. And then there is a whole range of additional miscellaneous fees that kind of goes into these standard bailment agreements. The huge operators have more sophisticated options, such as using interest rate derivatives to fix or cap vault cash rates. For example, if you kind of look at Cardtronics and their filings from 2018, they spent $162 million last year on vol cash and other cash cost related expenses. They hedged, and I'll explain a little bit more about that in a second, but about 60% of their vol cash, and I think they had approximately $3 billion of outstanding vol cash out there during last year on average. 60% of that was hedged from these rate swap contracts and interest rate cap agreements. Uh-huh. And then the remaining 40% was unhedged, and that would, like anyone, be subject to floating rate formulas. Most deployers generally are pegged to prime rate. Cardtronics has a slightly different approach based on their borrowing capacities, and they are generally basing a different benchmark known as the London Interbank Offered Rates, which is known as LIBOR. Mm-hmm. But again, interest rate derivatives are very interesting, but they're really not viable options for most. Cardtronics, as someone who is borrowing, again, I believe north of $3 billion of vol cash on the street at any given point, they have different options.
Right. So for the smaller operator, that doesn't really factor in then.
Correct.
Yeah. Well, that kind of leads me to the next question that I had, and that is what you're seeing now in cash cost trends. How are things going right now?
Well, it's a good question. I think ultimately it comes down to prime rate. If you were to kind of chart out prime rate, over the last decade, as we know, in the aftermath of the financial crisis, prime rate was way down at 3.25% for many, many years. And then starting in, I believe, 2015, in December of 15, it started to tick up slightly through very recently when it kind of peaked at 5.5% in December of 18, and then as we know, it has now started to drop slightly. So we'll see what happens. LIBOR, again, which is really not applicable to anyone other than the top providers, has its own slightly different charting, but a lot of the future of all cash rates really comes down to what's going to happen in the interest rate environment. I think deployers have been increasingly become much more aware of cash costs because, in general, every deployer out there is trying to figure out a way to keep their overall cost down to improve profitability. Some deployers have realized that they're not really optimizing their cash management with cash forecasting. And I think that depending on interest rates and armored rates and other cash costs, in general, there's way too much cash sitting idle in ATMs around the United States. And that can be very inefficient use of money. And it also increased the risk of theft and loss or breakage.
Right. So, yeah, you want to figure that so that you have the least amount possible to control risk and cost. But that can be really difficult to put a finger on, can't it?
Very difficult, and it's very complicated. Yeah. And you need to either be extraordinarily sophisticated internally in order to manage this in a cost-effective way, or you should consider outsourcing cash management to someone who is sophisticated and has the right tools and algorithms.
Okay. Well, you had mentioned you mentioned the trend in interest rates, but what about other cash costs that we're seeing now, CIT and self-loading and that sort of thing?
Well, it's a good question. CIT, I think, over the last 5 or 10 years has certainly gone up. I think you have a combination of factors that goes into it. Number one, there has been some consolidation in the cash and transit industry, so there are fewer competitors. Prices have gone up as a result. Number two, labor prices have gone up steadily, and that comes into play. And then number three, the fact of the matter is that this is a pretty risky business. So I think, a lot of the armored carriers out there and cash and transit providers have kind of concluded that they deserve to actually get paid in a way that they turn a profit. And I think they've been a little bit more disciplined in terms of how they price cash in transit. So I think prices have gone up. That has resulted in cash costs kind of going up, or people going the other way and saying maybe I should consider loading my own cash. Again, I think in order to be kind of honest with yourself, that's not free. A lot of people like looking at that as, oh, this is great. I'm using my own money and my own time, so therefore it's free. Well, maybe if that's how you want to account for it. But I think no one else, if they were ever going to consider purchasing your portfolio, would look at it that way.
Oh, true. Yeah, that's a good point. What are ATM deployers doing to control their costs? Besides trying to self-load and something simple like that.
Yeah, I mean, I think a lot of them, as they become increasingly aware of how these costs actually impact their P&L, have, in some cases, tried to negotiate with their vendors. Number one, this is cash in transit providers as well as vol cash providers. But that's a difficult negotiation, and frankly, unless you are growing significantly and borrowing more or loading more, you probably don't necessarily have the leverage to negotiate a better deal.
Mm-hmm.
The other thing that a lot of people are doing increasingly, and frankly should be doing more of, is considering outsourcing cash management. And look, accurate cash forecasting and monitoring is truly critical for effective cash optimization. Without good cash management, ATM operators pay way too much on interest, or too much on cash deliveries, right? Depending on if they are putting in too little cash and delivering too frequently, or putting in too much cash during a higher interest rate environment. Either way, it's not a good decision, and balancing those two are very difficult. So relying on simple spreadsheets is asking for some trouble,
Mm-hmm.
and predictions are often flawed. Cash forecasting is complex, and consumer cash usage doesn't always follow straight lines, right? There's things that happen. There's holidays, there's large events that might be unexpected, or parades, or there's hurricanes or blizzards or a whole range of other things that don't follow a linear pattern. So I'll give you an example. Let's say there's going to be a huge hurricane hitting a specific market next week, and there's some warning of that. In theory, and again, not everyone follows this because it's difficult, but in theory, you should probably fill your machine in the days before the hurricane hits, because there's going to be a surge on cash withdrawals, right? And then, if you can, you would probably remove most of the cash right before the storm, because you're going to have significant risk of that machine being destroyed, or the location being destroyed or flooded or something, and you just don't want to take that risk. So the less cash you have in that ATM right during the storm, the better. But then you do want to reload the machine right after the storm, because people need money immediately, particularly in disaster situations. And so that's kind of the perfect scenario. But there's many CIT providers out there who just don't have the capacity to do this for everyone. That is not going to be a normal week. Right. So that's kind of one example of things don't follow perfect patterns, and you need to plan, and you need to kind of be ready for a whole range of unpredictable scenarios, or you're going to be paying a lot of extra money and fees for emergency cash loads, or otherwise having a lot of downtime because you're out of cash. And that's not good, because A, you're out of cash and it irritates customers, and in theory that was avoidable. But B, you're probably then going to either be out of cash for many days or longer, or you're going to need to pay extra for an emergency cash load. And all that's bad for business. So that's kind of one end of the spectrum. At the other end of the spectrum, as having big buffers, i.e. way too much money in your ATMs sitting idle, is often very expensive as well. So again, it really requires a very methodical, disciplined approach and expertise to get this right. And even the best people don't always get it right. So I think that's even more of a reason why thinking that a simple spreadsheet would work, is really asking for trouble. So a lot of people have kind of concluded this and said, you know what, I think I should outsource this.
Well, I know that there are some people who are still relying on methods as unsophisticated as Excel spreadsheets, but I also know that there's some computer programs out there that that people use. How useful are those?
Very useful. I mean, much better than a simple spreadsheet.
Mm-hmm.
By design, these software packages really rely on pretty complex algorithms to do their best to get this right. That said, and as I said earlier, I mean, even this software and outsourcing all cash management, even then there's some things that aren't right. And that's just the nature of things happening that are unexpected. But in general, they will be much, much more cash efficient and optimized than people not using these approaches. I think they're terrific and absolutely worth the money, just because, again, if you get this wrong, you're going to either have way too much cash out there sitting idle, and that really does add up, right? I mean, if you have one machine, that's one thing. If you have dozens or hundreds or thousands of machines with too much money out there, that's exceptionally expensive. Yeah. And then on the other end of the spectrum, if you don't have enough money out there, then your armored costs are going to go way up, and you're going to have a lot of emergency cash loads.
Right.
Or you're going to run out of money. None of these scenarios are good. Balancing it is very difficult. So I think spending some real time and money on getting it as good as possible, maybe not perfect, but as good as possible, is very smart.
So what are some of the things that deployers might be overlooking when they're looking for cost controls?
I think a lot of it really comes down to control what you can actually control, right? You can't control interest rates unless you are large enough to take advantage to some of these derivative-based strategies. But again, that's really not an option for most. Yeah. So if you can't control interest rates, then what can you control? Well, you can at least try to have the best possible arrangement on vol cash that you possibly can. You should make sure you understand every possible fee and make sure you're optimizing how you use that vol cash. You should make sure you understand every detail of your cash in transit arrangements and make sure that you optimize that. And then again, a lot of it just comes down to good old kind of cash optimization and cash management by being really sophisticated and on top of how much cash is sitting in each of your ATMs today, and is that the right amount, and could you have less of it or more of it depending on what you are forecasting prior to your next scheduled delivery. Again, I think some people do well by loading their own cash, but it's not for everyone, right? First of all, you're not going to be able to load borrowed cash. So essentially, you're going to be loading your own cash. So that's only applicable to some people, typically the smaller deployers. And it's risky, right? The advantage is that you save a lot of money on cash in transit, a lot of different other fees. You, by not borrowing the vol cash, can have that cash back in your bank same day when you return it, versus taking into account any delays on the interest. But it's very risky business, and it's not for everyone.
I know that there's been I've heard that there's been a trend toward sort of overloading machines because the cost of cash has been cheap, especially in the U.S. Are you seeing that sort of changing now?
I think we will now because, as we talked about earlier, vol cash interest rates are low, right? I mean, if you look at the last 10 years, certainly they were slightly lower 10 years ago, but historically speaking, they are still exceptionally low. Yeah. So I don't want to call it free money, but it's close to free if you were to look back over the last 50 years, right? Yeah. And that's a good thing for ATM operators. Now, what's important is to figure out what's on the other side of that coin. So if you have relatively cheap money if you will. But at the same time, you might have expensive labor rates and or expensive fuel rates, then the CIT costs might be slightly higher than what they have been historically.
Mm-hmm.
And that would lead to maybe it's kind of a good use of money to have a lot of cash sitting there idle, right? Because it's relatively cheap from an historical perspective, and you have relatively expensive from a historical perspective CIT rates.
Right.
But it's a balancing act, and everything can change, and it can change quickly. For example, if you were just to look at fuel prices, you really need to keep that into consideration as well, because fuel prices come into play in a lot of these CIT contracts that do have fuel surcharges, and those do fluctuate significantly based on diesel, gasoline prices.
Will insurance rates also factor in there if you're carrying a lot of cash in your ATMs?
It will, and again, that kind of depends on who you are, how much money you're borrowing, and where you're borrowing it from, and then who's insuring it. There's a lot of different variables that come into play.
Yep.
But to your point, it's a risky business, so therefore insurance is not free and it's not cheap, but you are very glad that you have insurance if there's a problem, right?
Right.
Now, that said, a lot of people, and this is typically really only applicable if you're using your own money, because any vol cash provider would not allow you to self-insure in general.
Mm-hmm.
But to the extent that you're using your own money, a lot of people self-insure, which basically means you don't have insurance, right? And you are responsible for any losses on your own, and
Sure.
you have no backup there. And, look, in general, insurance companies make money. Insurance rates are profitable for the insurers. So usually insurance is slightly more expensive than what the losses are expected to be, right? Mm-hmm. So self-insuring can maybe save you some money. That said, self-insuring works quite well when you have no theft, and it generally does not work well when there is theft, right? So I think, again, like everything involving cash, it's expensive and risky, and you need to know what you're doing and assess the risk and make sure that you're making the right decision. But if you get it right, there's some money to be saved.
Yeah, right. But you have to be pretty comfortable gambling, I would think, in that kind of situation.
It's a complete gamble, and the odds are slightly in your favor that you will save some money.
Mm-hmm.
But it depends if you're a huge risk taker, because if you are wrong, you could get catastrophically damaged, right?
Yeah.
I mean, it depends on what happens here, but, in theory, if there's some enormous event, you could really lose your shirt, right? And insurance is a smart thing, it's a good thing, and frankly, it's a required thing to the extent you're borrowing this money from a third party.
Right. Okay. So we've talked about how complex this all is and what a delicate balance it is. I know that an alternative to that for many fleet owners would be to outsource aspects of their operations in order to reduce costs and the risks and the unknowns. Are you seeing this happening with cash management, more outsourcing, and how can outsourcing help specifically?
Yeah, I am. And again, I think, this has been a trend over many years now where people realized that their simple spreadsheets weren't quite cutting it, where, they were generally not running out of cash, but they had way too much money in the ATMs that were sitting idle, or they were running out of cash all the time, right? Mm-hmm. Either way, that's not good. Therefore, the simple spreadsheets weren't cutting it, and they started outsourcing. I think outsourcing is a great solution unless you are big enough or small enough to do this on your own, right? If you're tiny, you have one ATM, 5 ATMs, you can figure this out, right? This is your day job. You have time to really be thoughtful about making sure that you're doing the right thing. And on the grand scheme of things, even if you're slightly off, it doesn't matter that much if you only have a couple of ATMs.
Right.
If you're huge, you can have your internal team spend a lot of time on cash management, in forecasting and all sorts of other things. And you can justify that cost as well. You might be good at it, you might be okay at it, you might not be so good at it, but at least you can afford to have people dedicated to trying to do this well, right? I think really where people have trouble is if you're not tiny, but you're also not very large, and then you don't really have the budget to create a in-house cash management program that's adequate for your size, but you're also way too big to be kind of winging it, if you will, on your own, and therefore you're kind of in this tough spot where you're kind of in the middle. And I think those deployers can absolutely benefit from outsourcing it, because then they don't need to worry about it. They don't need the staffing to do it. And they can kind of outsource a lot of these headaches and very complicated decisions and algorithms and all the vendor management and all sorts of other things to someone else who actually does this quite well.
And one final question, if someone is looking to outsource their cash management, what are the things that they should look for in a relationship with the cash management provider?
Yeah, it's a good question. I mean, look, this is not the type of service that someone who doesn't know what they're doing should be offering, right? So I think the cash management providers out there are all quite sophisticated and all have complex algorithms and expertise to be doing what they are offering. So that's a good baseline requirement, right? But I think everyone out there has that. But look, the people who are more experienced or more savvy or sophisticated at doing this, they have some really great data, years of data, right? From the vault cash providers, from internally produced data to proprietary data and methodologies, and they're able to kind of confirm all the daily orders and audit the delivery and, work with the armored carriers and monitor cash balances for shortages and coordinate and manage special emergency cash orders and audit everything. All of those things require a huge amount of work and time and level of sophistication that I think all of the outsourcing partners, if you will, are good at and offer. And then it just comes down to, who you feel most comfortable with and who you think will do this well in a cost-effective way, right? You don't want to do this if it's going to cost you a lot more money after taking into account doing it on your own and the expense of making mistakes. But to the extent that you can not only save money by either saving money on interest rates from cash sitting there unnecessarily idle, or save money in the form of fewer emergency fills, etc. To the extent you can save, then of course it would be a great thing to not only save money but also not need to do all that work, right? You kind of win in two ways.
Right. Well, that's a great place to wrap up. Winning in two ways. I like that. Thank you so much for your time today, Sam, and for your expertise. Really appreciate it. We'll hope that some of our podcast listeners will get some great information out of this.
Anytime, Suzanne. Happy to do it.
Thanks. Bye-bye.
Keep your ATM vault cash costs under control with U.S. Bank Cash Management Services. We offer proven cash strategies along with a collaborative approach to help you get ahead. Benefit from reduced cash sourcing fees, extended replenishment cycles, and funds recycling that works in your favor. Explore cost control strategies at usbankcms.com.